Let me ask first about the buyback. It was a surprise to the street. They're taking it obviously in a positive fashion, but how did you come to the decision to spend the cash like this instead of on something else?
Well, we looked at three factors, really. I think that's what drove the decision. The first was that we were generating very high free operating cash flow throughout the quarter three. We expect that to continue for the rest of this year and into the first half. And that's driven by very high margins that we're experiencing at the moment. So at 9 months, we generated 1.2 billion euro of free operating cash flow. Daily trading on our stock now has increased significantly as buyer has continued to sell down the stock. So we now have a free float just above 75%. And we've looked at external M&A, but to be honest, in the current economic environment, we cannot find anything that is truly value creating. And part of that is because money is relatively cheap and the multiples are very, very high. So we decided the best investment was actually in Covestro. So that's why you see our share buyback announced today. We had always said that we would offer this buyback if we couldn't find anything sensible in the M&A space that would create value, and that's the case. So that's the reasoning.
You beat the expectations with earnings and sales. I'm reading a note from Botter analyst Marcus Meyer, who says you beat in every single unit, although polyurethane was the main beat. If that's the case, why just hold your fiscal year 2017 guidance? Why not raise it?
Well, the way in which we give guidance is not to give specific numbers, obviously, and we've confirmed that for full year EBITDA will be significantly above last year, and for quarter four, more importantly, it'll be significantly above quarter four last year. And we've given some math that you'll see in some of the analyst notes of around about 300 million greater pricing power that flows through into the fourth quarter. So I think most of the analysts have done the mathematics and have got a much higher number than before in consensus for full year. And I think the important thing is that the fly-up that we've seen on one of our products, it's only about 10% of our portfolio. We saw that in quarter one, two, now in three. We expect it to continue into quarter four. And we don't expect that to decline until the middle of next year, in the second half. So I think that pushes up the view for next year as well. And I think people are just adjusting consensus and their models, taking the mix of products that we have and getting better outlooks for next year as well.
Patrick, good morning. It's Guy in London. You talked about the fact that Bayer has been laying off stock. The latest big chunk, I think it was 6.9%, came off the block in September. Those that bought it can't sell until December the 11th. When they do you expect that just to go into the kind of open float, or are you looking for maybe a kind of an anchor investor to come in, maybe pick up some of that stock? And would that be desirable?
Well, I mean, you can argue either way about an anchor investor. I think the important thing is that every time Bayer has put stock out there, we've seen a short-term decline in the value, which has recovered pretty fast. If you think how much stock they've placed over the last 6-month period, then actually the stock has performed almost without noticing those placements, to the point where we are now with free float above 75%. Not worried about the buyer placements because they really have limited impact now on the